Welcome back. You're still tuned into Trading Hour on CNBC-TV18. Well, before we talk about the commodity market, let's quickly take a look at what the markets are doing at the day's high. It continues to be a very green-looking screen. The Nifty is up 153 points and the mid-caps are up 0.6%. But let's talk about a CNBC-TV18 exclusive. Sources tell CNBC-TV18 that the group of ministers set up by the GST Council, they've proposed rate changes for 148 items, including a special rate on tobacco and aerated drinks. Tim C is joining us now to tell us more.
Okay, we'll get to Tim C in just a bit. For now, it's over to Manisha now for all the latest on the commodity action. Manisha.
Well, thank you for that. I'm looking at the crude oil prices because out of many commodities and sectors, this is one sector that is ending 2024 in the red, and there doesn't seem a chance in the month of December that could really turn the tables around. So this is what we have at this point in time. WTI down 5% and Brent is down by 7% in this year until now. Well, a lot of things happened in 2024 which have continued to put pressure on the prices. To begin with, it has been weak Chinese demand, high inventories in the global markets, and then the strength in US dollar index was yet another thing. Add to that the fact that when you look at the world market, there's an 8 million per barrel day spare capacity lying around. So even if there is demand that picks up, you still have all of this spare capacity to come back into the market. Future forward, and let's move on to 2025 now, and things to watch into that one. Well, the markets do believe that it is going to be about the increase in oil supplies from OPEC, non-OPEC, OECD and US markets as well, which will keep the prices under pressure. The other thing to watch out would be the China stimulus and demand therein, and then, of course, pace of energy transition, EV adoption. Those numbers, remember, continue to grow, and if that happens, you could be looking at pressure continuing onto fossil fuels. The street will also keep an eye on geopolitics, especially Iran nuclear fuel production. That is an added thing for 2025 to keep an eye on. And then it also is about going to be about the new president in US, while he is talking tariffs already, and we have seen that put pressure on prices. In addition to that, Trump also says that export permits for new LNG projects is something that they are working on, and that could be granted. The second point is also about approving higher oil drilling off the US coast and federal lands as well. Under the current presidency, this was all suspended. And then funding of new monies to replenish the strategic petroleum reserve is yet another thing that you could be seeing putting pressure on prices. So there's various stuff that you would want to watch out in 2025. Keeping all of that on the background, this is what the global banks and brokerages have come out in sense of price forecast for 2025. The most bearish of all that really is Citi at $60 a barrel. Not too far away from that is Bank of America at $65. And then there is the $70 club, which includes JP Morgan. And you have other banks as well, believing that $73 to $76 a barrel is what you could see. Goldman Sachs is looking at 76 as well. And the most bullish really comes in from UBS, expectation of an average of $80 a barrel. So at this point in time, it's a big range of $60 to $80 for Brent prices for 2025. Well, as we get into the year, we perhaps could see a narrow range of that.
Okay, all right. Thank you so much, Manisha, for making sense of what's happening in the commodity space, especially crude oil prices. With that, we'll slip into a short break. Prateek Jain from PwC India and Abhishek Jain from KPMG India will discuss the likely changes ahead of the GST meet slated on the 21st of December. Stay tuned for that.
CNBC-TV18 has been synonymous with the Indian stock market. So the two of them go hand in hand. Stock market is now becoming the anchor to the household balance sheet. And the likelihood is that households will continue to invest more and more. So given that, I think CNBC-TV18 is a very reliable source of both analysis, information, as well as guidance to the millions of retail investors in India.